Now, this is a Shopee market. So, how do we do this? Now, I said this is a higher time frame, that's a daily time frame. This is daily time frame. So, when we move to a lower time frame, which is, you'll find out that this particular uh, market that doesn't have a clear direction, you find out that it's a shopping market. When you move to a lower time frame, it doesn't have a clear direction. So let's move to someone like 4 hours. You find out that it doesn't have a clear direction. You see this particular direction. The market is not giving you a proper direction, then we call it a shopping market. Now let's draw this shopping market out. You find out that it is a shopping market. You can see what I'm doing. So what did I say about the shopping market in the last class? So whenever you see a shopping market, you should run away from the market. Stay away from the market because you are going to lose all your money inside the market. So you need to stay away from shopping market at all costs. Is that clear? Now let's bring it out. We can see shopping market doesn't have a clear direction. This is a shopping market. So when a market is giving you no clear direction, then you need to stay away from that market at all costs. Is that clear? So this is a shopping market. Now let's move to another lower time frame. Then we will bring it out, then you'll be able to see what we call the shopping market very well. Look at this market as well. In the lower time frame, you can see it doesn't have any clear direction. So it is a shopping market. It's what we call the shopping market. When you are now having a lower lows, higher high, you are not having higher highs, higher lows, higher highs, higher lows, and you are not having lower high, lower lows, lower highs, lower lows, or you are not having a ranging market, then that market is what? A shopping market. So you need to stay away from what? A shopping market. So this is a shopping market. So when the shopping market, you find out that at this end of this shopping market, the market sweep this particular, break this particular, this the higher highs of this shopping market. So the market break this particular zone. When the market break this particular zone, then you'll find out that okay, probably this market is about to have a clear direction. For you to know whether a shopping market has ended or not, so you just draw a line. We'll be having that in some other class. So you draw a line, and so this is the higher highs of this shopping market. This is where the shopping market started from, and this is another one where this shopping market started from. Now, market need to break this particular either of these two for you to know that this is the end of our shopping market as already what is closer. So this is going to be the up of our shopping market. This is going to be the downside of our shopping market. Now, when the market break this up here, you find out that it quickly rejected downward. It did not continue with higher high and higher lows. The market moved down to this side and break this particular zone down here. And when this market break this particular zone down here, then it started forming, it break this zone here, then it form the higher lows and it also form the lower lows. You can see the market break this zone here and the market now break another zone here. The market break another zone in this place. Market break another zone, telling you that the market is now what? Now has a clear direction. Now in this case, we now have what we call the higher lows, the lower high, lower high, and now I have the lower low. I have the lower high, lower high, lower lows. You can see now in this particular case, from trade, from this trade, from here, from this trade, this side, we have two different types of market structure. We have the higher highs and higher lows. We have the higher highs and higher lows. We have the higher highs. We have the uptrend market, which is higher highs and higher lows, higher highs, 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 and this break this particular trend line, then form the lower low. Instead of it to continue, then we have what we call a shopping market, which is the another type of what market structure, the third type of market structure, which you need to avoid at all costs. Now, when it comes to this side, I said if you want to note if there is an end of shopping market, you need to draw a line and where the time beginning of this the highest level of this higher high of this shopping market, or you can call it the swing high of this shopping market and this swing low of this shopping market. Now the market need to break either of these two and form either higher highs and higher lows upward, or to form a lower low and lower high in this lower boundary of the shopping market. You can see it break this zone and refuse to what continue with what its uptrend direction. But it break this down here and started forming a downtrend direction. Is that clear? So this is an uptrend market. Now this is a downtrend market where we now have something like this. Now have our the downtrend market. You can see a downtrend market. Now have a downtrend market, which will now form the lower highs and the lower lows. Now this particular market is the higher time frame. When we move to lower time frame, we will see that this particular from this point, from this market point to this side, from this market point to this side, you find out that we have a lot of lower highs and lower lows in that particular structure. Move to the 4 hours time frame, you find out that we have a lot of higher lows and higher. You can see the lower time frame, we have the lower high, we have the lower high and lower low. You can see we have lower high and we have the lower low. So in some other class, we are going to talk about trend lines and break of structure, the change of character and market structure shift. But you need to subscribe on this YouTube channel so that you will be able to be alert, or you are going to be informed on when other market structures, other explanation on market structure drops on this page, on this channel. So like and follow, like and subscribe on this YouTube channel. Now let's go to the other time frame. So this is a trend line in this place. This is a trend line, and you can find out that when it comes to this side, this I said when a particular candlesticks, this is a candlestick, for example. We are going to be talking about candlesticks very soon. So this is a market because I've already taught you about candlesticks and all of that. So this is a candlestick, for example. This is a candlestick, and we have This is the week. Sorry. I want to draw something. So let's use this one. This is the body of what? Of the candle. This is the body of the candle. We call this a candlestick. Candlesticks. This is the body of the candle. And this is what we call a wick. So this is also a wick. You can see now this is a body of a candlestick. A body of a candlestick. And this side is the wick of the what? Of a candlestick. For candlestick, usually have a body and what? And a wick. Or you can call it a body and a tail. Head and body and tail. So when a particular body of a candlestick break this straight line, we are going to talk about trade line too very soon. When it break this body of this trade line, you can see when it comes to this side, the body of this candlestick did not close outside this trade line. And you can see when the body break this particular trade line from this side to this side, then we are now having a change in direction of the current market structure. You can say the previous market structure is here is what is in a downtrend market. So when it break this particular trade line, then we now have a change in market structure. Now let's go to the next market structure. Go to the next market structure of this particular market. So you can see in this case we now have another trend line in this case. But let's not go to trend line today. So you see in this case we now have a new change in direction, new change in market structure. You can see it break this particular line. When it break it, then it means there is what? A tendency of change in direction of the market structure. You can see change in market structure, and you can see we now have a new market structure. Tell you that the market structure of the previous trend has changed to a new direction. Now we now have what we call a new direction, and this is what a trending market which we call an uptrend market. So why do we call it an uptrend market? We call it an uptrend market because now have what we call the higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, you can see the market is what? Is in a what? Uptrend market, which means that at this particular stage, we are going to what? Keep buying in the market.